Yeah, this has never happened before with a SPAC deal. As most people know, SPAC deals come at 10. Often there's a PIPE associated with it.
Our good friend, Mr. Wonderful, back with us. Kevin O'Leary, we appreciate your time as always. Thanks for doing this once again, Kevin. We're going to get to Palantir. We're going to get to a number of different topics here this morning, but I want to start things off in the crypto market because it's been a wild ride, obviously, over the past couple of weeks for Bitcoin. We can talk about Shiba Inu as well. What do we think here now? All-time highs last week. What happens next here, Kevin, in your opinion?
Well, I think let's deal with Bitcoin first, because I certainly don't just own Bitcoin when I think about crypto and decentralized finance. I mean, I broadened my portfolio a lot. I started with a 3% weighting in crypto, primarily Bitcoin and Ethereum at the beginning of the year, and now I'm on target by December 31st to be at a 7% weighting in terms of allocation to crypto in the operating company's portfolio. Now that is a significant move for us because really we have some mandates around size and of each position. It can't be more than 5% in any one name. So in order to do that, I've expanded my horizons in crypto. So I've started to buy a lot of the level 1, level 2 chains, blockchains, lots of tokens, lots of coins, about 21 different positions now, and I've built a desk within our company with 3 people on it managing it. I formed that relationship with FTX. I was one of the private investors last week in the $420 million round. I now own a piece of the company, and I'm a paid spokesperson along with Tom Brady. So I'm total disclosure here. I'm using the platform to manage my crypto portfolio, using their traders globally. So I'm all in. I'm all in on crypto, and my thinking is this. Everybody should get their head around a different way of looking at it. I don't think about Bitcoin. I don't think about, Ethereum the same way other people do. To me, it's software. It's productivity software. I own Microsoft, just had a fantastic quarter. I own Google, it's software. I own Facebook, it's software. The whole crypto market and decentralized finance is simply software. And the hottest hands in the world today on the hottest keyboards are doing decentralized finance and crypto. The smartest programmers. Why wouldn't you want to be in this platform? Now, I get it. Some people are skeptical that it's all a Ponzi scheme. That's not me. I'm saying I'm investing in software. Just the same way the internet was nascent, decades ago, we're in a new place in financial services, and that's why I own crypto.
Kevin, I'm going to give you a few stats here. 57% improvement in sales, 73% more deliveries, earnings per share 145% year over year. Yesterday, they get a deal, or a couple days ago, they get a deal from Hertz for 100,000 cars. You know what I'm talking about. So does everybody who's watching this. Let me move this away and talk about Tesla. Up 25%, guys, if you can come over to the chart here. Tesla up 25%, not year to date, Kevin. Not month to date. Let's talk about a week and a half since earnings, not even that, up 25%. What do we think on Tesla here? Touched 1,100, got a little meme-ish, I feel, on a gamma squeeze up to 1,100, even 1,110 there, but now you're back to 1,050. What do we think about Tesla since we're talking about energy? I think it's a forever long. Please agree with me.
Yeah, well, I'm a little biased because my son now works there full time. He works in San Francisco. He was an intern for 2 years for Tesla, and his team out of McGill beat MIT in the Formula One electric race. They hired all of them. They took the whole team right out of McGill, put him into Tesla. And so that's where he works. He's a shareholder, obviously. But what's really moved this stock have been the upgrades with some major analysts, as you're well aware. But one of the other reasons is that for some reason, this company has avoided the challenges of supply chain issues. They've really nailed it on getting their suppliers on board and getting a proprietary position, particularly on chips and other pieces of the car that are so important. And other manufacturers don't have that benefit. You talk to the other car companies, try and get a Ford 150 right now. It's really, really hard, and the demand is insatiable for that truck. And so Tesla's avoided that. That Hertz thing really helped. They've built out their infrastructure. The talk of the battery getting even more efficient. All of this is in favor of a remarkable situation. I see the stock going higher.
I have to get your opinion on something because you're talking about the growth of Tesla, unbelievable. We can talk about energy, just the overall economy. Everyone keeps talking about inflation. you hear a word come out of the mouth of Jack Dorsey, hyperinflation, right? And then days later, you have a Kathy Wood talking about how you're going to get deflation, and they have very vast opinions and on the extremes here. And I understand, people will have their own opinions. Sometimes that's going to scare the everyday investor, makes them panic, thinking, "How do I prepare for hyperinflation?" Ridiculous. How do I prepare for deflation when everyone's talking about the opposite? So I just want to get your thoughts on the overall economy, what they should be doing about the supply chain issues, how you might be thinking to defend against worst case scenarios, and maybe just your overall thoughts on some of these extreme opinions that come out of, we'll say it, very influential people, and what do you do with them?
Yeah, I mean, here's where I'm at on this. There's a real tug going on between the hyperinflation crowd and the deflation crowd, and they both have points with merit. But this is the way I see it, because I'm pretty close to the economy through about 34 different private investments I've got in sectors like insecticide, wireless charging, gym equipment manufacturing, commercial kitchens for the airlines, all this stuff. And so what's occurring right now in 2/3 of the economy, which is a big part of it where jobs are created and where you see pricing pressures, is because of the broken supply chain management system. When you're, let's take the car example, we were just talking about Tesla and Ford. When you have to deliver a truck, when you used to get your parts from a low-cost manufacturer in Asia, and now you don't have access to that because you can't get it in the port of Los Angeles because your ship's waiting out there for 6 weeks, and they're trying to fix all that, but it's still broken. And once you even get it into port in LA, you've got to transport it, and you still have a hard time getting container space. All of these things are broken right now. So what you end up doing is sourcing those parts in local markets at 3 to 4 times the price. And that in itself is extremely inflationary during this period of broken supply chain management. The reasons you haven't seen the long bond move, because believe me, that is the best indicator of inflation. If you smell inflation coming, you're going to see some really crazy volatility in the 10-year and longer duration debt. But you haven't seen that yet. You still have these incredibly low rates because most market participants that monitor inflation, other than these pundits that are putting out their personal opinion, think that it's transitory, that when you fix the supply chain management, all of the productivity enhancement that's come through the pandemic and technology and all of this amazing change to digitization, direct-to-consumer 2.0, these things are anti-inflationary. They're productivity enhancements. And so you're going to have this debate going back and forth, but I'm in the transitory mode that says the reason the 10-year, I'm a bond guy. I mean, I watch bonds more than anything else because they are always the canary in the coal mine when you got trouble coming.
Kevin O'Leary, we got to get your opinion on something that's made a lot of headlines this week. A lot of traders have been talking about it. The retail world has been talking about it. And I'm speaking of, obviously, Trump media and this SPAC deal, DWAC. What do we do with this thing? How do you even approach trying to quantify what this means and where it could go?
Yeah, this has never happened before, the SPAC deal. As most people know, SPAC deals come at 10. Often there's a PIPE associated with it so that institutional investors can price it. And after it de-SPACs and starts trading as a stock, it's the company's performance that you're watching to see what happens. And many people do not invest in SPACs. They wait till they're de-SPACed and they just look at the company from the analyst point of view and buy the stock after it's trading. This has never happened. The anticipation here is that one of the reasons Trump did this is he got muted on Facebook. He got muted, he got canceled on Twitter, which was his vehicle during his presidency to communicate directly with his constituency. So he's building his own infrastructure. And 50% of the market finds that very attractive. They are the Trump supporters. They're vehemently in support of him and his voice. And the best job in the world you can have is being the ex-president of the United States because you have all this optionality. Now, I don't think anybody on that SPAC team thought this could happen. But this thing killed the shorts, slaughtered them. I mean, they just got taken up behind the barn and shot on this thing, which pushed it up in the 140s and then settled back. And then it's really volatile. But you don't yet know what Trump's going to do. I mean, you've got a direction that it's going to be social media, but you don't have any operating results yet. But I would argue as a new platform, it's going to work. There are going to be millions of people that were following him on Facebook and Twitter that are going to start following him again on this new platform. And in a way, become competitors to Twitter. Twitter did this to themselves. I've never thought it a good idea to cancel somebody. it goes against freedom of speech. You don't have to agree with Trump. You don't have to agree with the people they've been canceling, but they make that decision for you and you don't get to hear their voice. And as a result, it opens up competition, as we're seeing happen here. This is going to be highly scrutinized. There's a lot of excitement about his platform. Who knows if he's going to run for president again, but he's going to have a voice. That is for sure.
And it's a market cap that is, finding a bit of a bottom, it seems, at least the past couple of days. Kevin O'Leary, chairman of O'Leary Financial Group, we appreciate your time as always. Have a wonderful day, Mr. Wonderful.
Thank you. Take care, my friends. Bye-bye.
There we go, guys. Mr. Wonderful, back again, guys.